Welcome back to another video. So today I'm going to be discussing Meta, which is the social media advertisement juggernaut, formerly known as Facebook. I'm going to be looking at the stock's performance over the year, 5 years, setups where I think the stock may be going, up or down over the next 6 to 12 months, and just my overall opinion on the stock. So let's get into it. So as I did mention, back in 2021, CEO Mark Zuckerberg did announce a change in name and vision for the company where the name of the company went from Facebook to Meta. He did receive a lot of flack of this because the name Meta originated from the metaverse, which you could kind of think of like the internet to a sort. So he believed this better fit the company's vision, where it's going and its plans. But people did think that he was essentially taking a very generic name. Think about a company naming itself the internet when the internet is a open space for everybody to use. So that's what essentially Mark Zuckerberg did. In my opinion, I think it's a great marketing move. Anytime somebody says metaverse, meta, they're automatically going to associate it with the company. So you have to give him his credit for thinking about that. Although he took flack, he's doing what's best for his company and his stakeholders. Now, if we take a further look into the company Meta itself, there's a few businesses that it owns within itself. So the first is obviously the company Facebook. They also own Facebook Messenger, WhatsApp, Instagram, and Threads. So you can see this is a large company with several different businesses within it, and they're a social media juggernaut. Facebook, WhatsApp, and Instagram are all ranked in the top 5 of monthly users in terms of social media. And when you think about the landscape today of everything being data driven, which is why you see iPhone and its feature through the new iOS updates allowed you to pick if you want those websites or apps to track you. This is all a battle for information. So I'm going to get into that later in the video. But Facebook is king of it. With all this information on all these platforms, they're able to scale and essentially, to be honest, sell your information to advertisers, companies who are looking to target you directly with your ads. So let's get into the stock now. So right now, if we're taking a look, Meta is at 567.36 so far today. Meta's been on a great run. If we look at the yearly chart, which we are right now, year to date, the stock is currently up 89%, which is a great return. Interest rates have been raising. They're starting to cut them now. So you should see tech stocks come back more into favor going into 2025 and 2026. But even with this interest rate environment increasing, Meta's still been performing well. If we look at a 5-year basis, it's up 100, just about 200%, which is good. As I mentioned in past videos, the average return is 8 to 12% per year. So a company like Meta doing 200% over 5 years, that's a great investment. You can't really ask for much more in a company. If we're comparing Meta to its peers, such as Microsoft, Apple, Google, Amazon, you could see the performance. Apple is number 1, but Meta comes in at number 3, just under Microsoft at 210%, Google at 167, and Amazon at 117. So it is performing well in comparisons to its peers. It's in the middle of the pack. These are elite market leader companies. So any of these not trillion dollar companies, not all of them are, but any of these multi-billion dollar companies, them moving at this pace and growing is tremendous. These are not small companies just still trying to establish themselves. These are market leaders in their space and continuing to grow. So this is great return. So now let's take a further look at Meta stock. So if we go back here to 2021, you can see it hit a peak here and essentially fell down almost 77%. During this time, this was the height of the metaverse Apple, essentially billion-dollar corporation war that was taking place. Apple introduced a lot of features like the Ask app not to track through its iOS updates, essentially blocking businesses like Meta and Google from accessing client information, which in turn they would sell back to its own small business advertisers for income. That's essentially what these advertisement companies do. They have billions of monthly users inputting information, data, thoughts, where they're going, what they're searching for, what they need, what they don't like. And companies like Snapchat, Google, Facebook, they take that information and provide to business users. Some people think that it's a breach of privacy, example, Apple. So A lot of the issue why you saw the stock selling off is because this was reported to cost Meta billions of dollars by them not being able to access certain information on the lead-in phone providers' devices. So the streets, the analysts started to sell the stock off. It sold a total of 77% because people are thinking, how are they going to grow their revenue? What's a social media advertisement juggernaut going to do if they no longer have access to all that information? Well, the great CEO, which Mark Zuckerberg has shown to be in over his tenure with Facebook, or Meta, I should say, is that he began to cut staff, unfortunately, which is the first way to increase bottom line. If you decrease how many people you're paying, you're automatically going to increase how much money you're making. So, one, he did that. Number two, he announced buyback in shares. He was repurchasing shares at record amounts because the stock was so low. At this price down here, it is worth to buy. And I'll be honest, I'm not the biggest fan of Meta just because I don't really see it having the growth laterally and vertically as some of the other mega cap companies do. It's still a great company, do not get me wrong, something that you could still build your portfolio on, but I do prefer Apple, Microsoft, Nvidia, Google, Amazon. I do prefer them over it. But if you're able to get Meta at the right price, that would be my best suggestion. So after this big sell-off, after the analysts, everybody got worried and Mark Zuckerberg did a great job and several earners that were missed, Meta went on a tremendous run. It essentially went up 550%. That's tremendous without any massive 20 to 30% drops. It did have at least a 20% drop here, but nothing catastrophic per se. So if you're looking for entry on Meta, the one thing you need to keep in mind is following this trend line. Since this bottom in November of 2022, it's essentially been on this line, this trend. It hit it here, hit it here, hit it here. If you want to see Meta begin to come back, it has to break this trend line here. If it breaks the trend line, it will begin to find support down here and retrace. So if we're looking for specific entries on the stock, the first price I'm going to be looking at is at 383, which is the all-time high, or the previous all-time high. Usually when stocks break through the all-time high, it usually does come back and retrace that previous resistance, which now becomes support. So that 382, 383 is my first spot I'll be looking at. The second spot I'll be looking at is that 275 area. As I've mentioned in previous videos like Tesla, you want to find that support. It hits this area a lot, and seems to bounce. So this is an area you want to be buying at. And the final zone I'll give you guys is this 201 area. This is another zone I'll be buying at. When you're looking at support, you see it hitting here, it hits here, it hits here, it hits here. These are great areas where you want to be picking up the stock. I'm not saying this is going to come overnight, but these are long-term investment areas. If you hold for 3 to 5 years, you'll be okay. Let's also use some more technical analysis. Let's clean up some of these drawings. Let's bring out the Fibonacci retracements. So if we do a Fibonacci retracement on a 1-year chart, you'll see the entry points here. The 393, which is the 0.382 turnaround, is just slightly about $10 above my 383 line, so this is a good area for using the Fibonacci retracements. If we switch the Fibonacci retracements to a 5-year chart, let's take a look at where it's showing here. So the 0.382 line is at 275.02. I previously just showed you just a while ago that 275 was an entry. So after a while, just looking at stocks, seeing patterns, you'll be able to spot these support and resistance zones without even drawing the Fibonacci retracements as I did. You'll just be able to spot and see where you need to get in. So these are areas that you want to consider. And then look, the 0.236 line is at 205, and I had a line at 201. So these are the areas you want to think about Meta long-term at. If we're also looking at the last thing, let's just take a look at RSI for a bit. If we go back to the RSI, the yearly chart, you can see RSI is at about 73 right now. As I did speak about in a previous NVIDIA video, for RSI, the two numbers you want to keep in mind is 30 and 70, generally speaking. Something that is at 30 when it reaches down here is essentially considered oversold, meaning that the stock is at a price which is a good price technically to buy, generally speaking. When something is at 70 or higher, that is something that is considered overbought, meaning that the price is extended. You could expect a pullback at any time. So if you're looking at the stocks, usually when it hits the 70 or above area, you'll see the stock pull back, and usually when it hits here, 30, which it did right here, you'll usually see it bounce back up. As you see, it hit 536, the stock up here. If you look at the RSI hit 70, what happened? RSI dropped all the way back down to about 33, and you'll see the stock pull back down to here. So it's not always perfect. Sometimes they do contradict each other, but it's just a good thing that you can look at to kind of see where you think the stock may go. If we're taking a look at their financial results as well, you'll be able to see that they continuously grow their income and revenue year over year. Their operating expenses, all these numbers are going up in the right direction. So this is a sign of a quality company. As I did mention, I do believe some of the other mega cap companies may be better options just in terms of the business and the products that it offers. But if you're able to get Meta at one of those price entries that I showed you, long term, you'll have nothing to worry about. These companies are heavily invested by institutions. You see that all of us use these companies. There's not one person who doesn't use a Meta product, to be honest. So you're perfectly fine holding this company long term. Like, subscribe, comment, share. Let me know what stock you want me to review next. Thank you for watching, and God bless.